Good morning, everyone. Our last trading day of 2025. How's everybody doing this morning? Hey, Joe. Harris, what's up? How's Greece? Nice and warm? Hey, Tibby. Hey, Shanghai. Oh, just a few of us here this morning. I think it'll be a slow one. Do a nice quick little rundown, get you guys going, and then relax a little bit. Yeah, last trading day of the year. And we have our overnight inventory is short. Okay, overnight inventory is short. And hey, we might even get a New Year's Eve gap fill. Let's see what happens. So basically, we had 3 days of balance, right? We had 3 days here. Where is my pointing thing? There it is. All right. So we had 3 days of balance. Right. Month end was yesterday. Would we do a 69.45 and change close? Not bad, right? Pretty good year. Right now, drop the bids. Let the market makers who have to clean up their, we used to call it a trade blotter. I don't know if you guys have ever even heard that term, a trade blotter. That is basically where all your positions, it's all electronic now anyway. But yeah, so today is the last trading day of the month, market maker month end. So for our market maker friends, today is when they have to try and clean up their books, right? Their year end is marked to market today because they provide liquidity for the rest of us. And yeah, let's see if we can take out the 23s and the 13s. Seems like it's just kind of dripping a little lower. Hey, AO, how you doing? Happy New Year. And yeah, that's really not much going on here. We seem to have caught a bit of a bid. There's that, when we talk about poor lows, why is this so? When we talk about poor lows, that's what we're talking about. If, let me just make this bigger. You see how it's really slow, but we can still learn something, right? See, that J period is one tick only. So that means that there is competitive buying down here. There are bids. These are unfilled buy orders, right? Market moves up off of that level. Now, would have been difficult to have just arbitrary called that out. I knew there'd be some buying here at this overnight stop, right? The B low from the 23rd. So that just tells you where the shorts are willing to start putting some capital in and covering. And yeah, not much going on. 3 days supply above us. Exactly, Warren. Exactly. Right? So overnight point of control is here. So we found a bid at 26 for now. I'm going to run the 1 minute chart, and I got to go set VWAP. I'm very lazy today. I have done nothing. You can see that usually I have this stuff pre-done before you guys come on stream, but There we go. Hey, front runner, how you doing, man? Good to see you. Hope you had a good holiday. So I drew the balance zone down here. And you just double them, right? And all you're looking for in balance is you're looking for highs and lows. And when you look below that low, you go right back to that high, right? So you know where the two-sided trading is, right? Once you understand where the two-sided trade is, you're good to go, right? Actually, that balance is a tick off, but that's okay. Hey, Juan. What's up, man? Yeah, so there you go. Okay. Well, we're all set now. So the position from how I look at things, right, is the position from 5:45 my time to 7:30 my time is underneath us. So we're going to slowly creep back up. VWAP is going to be the goalie, right? Now, so the short-term position is underneath us. We're going to try and take it up as close to VWAP as possible and sell it before all these other sellers jump in. Right? So if you are long, right? Say you're long, maybe you were kind of bored, and yeah, I'm off on that balance zone by a tick. So, because those highs, I might have to get glasses. Starting to get old. Um, if we stay above 31, say you went and bought fish lips, what's up? What are you doing? Insomnia? You just ate too much. You got indigestion. Common Christmas theme. Good to have you. If you built a little position here, you should be piecing out of it. Put some orders in. Right. I know you eat because I'm the same way. You were a nose guard in football. Man, I don't know. You ever go to like a all you can eat buffet with an offensive line or a defensive line? The owners of the restaurant just freak out. uh, the good old days. The candle's getting small here, right? Really small. It's slow. Nobody really wants to buy this thing on the last day of the month and the last day of the year. What's our contract volume? Let's see, what's the volume? 32,000. Okay, so it's pretty light, as expected. Ugh. Poof. Yeah, these candles get any smaller that we won't even be able to see them. Let's see how many people made it or up at this morning. 36. Well, geez, that's okay. Welcome everyone. I'm JJ, vwaptrader1 on X, and this is the tradingsyndicate.org for the last trading day of the year. I'm going to do a year-end update. Um, I'll have some of it out hopefully on New Year's Day. Looking at, what we're looking at for next year. I'm not a predictor guy, so basically I let the chart tell me what's going on. And so I'll have levels for, all the cool kids deals. The Nvidia, Apple, Apple Crumble Gang, and ES. Now, was it last year that we had the first week of the new year? I think it was the first week of the new year, and the second week we had a bit of a sell-off. And everyone was like, oh my God, it's short, short, short. And everyone got short, and then everybody came back to work, and then the market ripped higher. So let's see if that happens this year. Not saying it's going to, but that is a scenario. It'd be nice to fill this gap before year end. This gap down here. Every time we've gotten close to filling that gap, it's just bid, 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 bid. Theoretically speaking, if we have a POC at the edge of a balance zone, should that change our expectations? Generally, yeah, if the POC moves down, right? If we get a sell-off, let me go show you. This is a good question, really good question. So the POC's here, right? And if it moves down, and if it stayed down here for a while, then you'd get some chop because it takes more. All of these people are selling and hitting bids and getting out. So it'll just sort of accumulate there. But you see on this move down, the point of control didn't get a chance to go all the way down here. So there really wasn't that much for sale, Joe. Does that make sense? So if the point of control moves lower quicker, that means you've got size selling coming out. If the point of control takes a long time to move down, or it doesn't move down, then it's just a really quick liquidation flush. And it kind of helps you. That's a really good thing. I'm going to write this down. I should do a video on this. I like it when you guys come up with stuff like that, because this whole point of control business has been very confusing, right? Because the way it's explained is, well, that's where 70% of the value area is, but that doesn't tell you anything. How do you use it, right? How do you actually use it to make money? That's the problem with a lot of trading stuff, right? So the point of control, when it moves down fast, it means volume selling, right? If you get a move lower and the point of control does not have time to move down, then it means the liquidation was light in volume. Does that make sense? I'll work on the wording, right? Now, that just gives you sort of kind of market intelligence, right? But your main execution setup is off of the 1 minute candle. So you could have even taken, you didn't have to worry about the point of control if you were just trading this 1 minute candle chart on the look below and fail, right? But it is good to be aware of your surroundings, right? Golf club style profile. That's a new one. Oh, thanks, Lake Show. I do get it wrong, but the one thing I've learned about getting it wrong, and it's okay to be wrong, guys, don't worry about being wrong. And that's why trading is really hard for like really smart people, like, PhDs and math people, because they're usually never wrong. But guys like me who are more quote unquote street, right? We're used to getting it wrong, right? And so when you get it wrong, just don't be wrong for a long time, right? Just admit you're wrong really quick. Like when you get into a fight with your wife or your girlfriend, it's best that you admit you're wrong really quickly, right? Otherwise, the whole process drags out, right? You guys know what I'm talking about, right? Just admit you're wrong, keep on trucking, right? It's the best thing to do. Just boom, I'm wrong. Okay, I'm out, right? You know, it just saves a lot of scarring. Yeah, don't get me started on that guy. But just admit you're wrong quick. How you doing, Marcel? Haven't seen you in a while. Hope you had a good holiday. You know, yeah. The best traders I've seen, they've been able to change quickly. You know, they they're like, oh, okay, I'm wrong, I'm out. Because the longer you're wrong, gosh, it just gets expensive, right? Rip off the band-aid, right? See, when you start working at a brokerage firm, you don't ever have to worry about, I'm going to be wrong for a long time because they'll tell you you're wrong, hit you in the head, and close out your position before you can even think twice. Is it significant in LBF trading to avoid entries once half a candle is gone? Yeah, it's another good question, Animal Hustle. So here's the thing. In a slow market, I like to wait for the next candle, right? So let's dig into this. This is a good question. Execution, and a lot of people are very fuzzy on execution. So what I do, right? So here's a look below and fail, right? There's one here, right? In a nice slow market, I like to wait for this candle, the second, where is it? Let me make this bigger, right? I like to wait for this candle here, the second, like here's the look below, right? And then the fail, and then you get this green candle. So I like to see if that one closes, and then the second one, the one night right after that, if that low cannot take out that low, and it can't transact at that 27 level, gives you a little bit more confirmation. Now, in a slow and choppy market, say you had gone long 27 and 3/4, you kind of know that there's going to be a seller right here at 28 half. So there's not a lot of meat on the bone in that trade, right? Here, the market fails to get below 27, right? And if it's nice and slow, you can really rewind these charts. If you have chart replay, rewind the different types of look below and fail. Now, in a fast market, sometimes you got to get in quick, right? And some people will use a 30-second chart in a fast market, right? Um, if I was going long here, my stop would just be probably 26 and 3/4. I'm cheap, Joe. So I, I I don't know. You could put your stop here in a more volatile market, and it also depends on your level of certainty, right? So on Billions and Bobby Axelrod will always ask Dollar Bill, "What's your level of certainty?" And Dollar Bill will say, "I am not uncertain," right? That's usually because he has inside information and he's given somebody a bag of cash. But in the real world, for us, right, I like using, like in a slow market, I like tight stops, right? So Here's the thing about this look below and fail trade. It's never the same, right? Yeah, you guys on that on the Nasdaq, I don't know how you guys do it. I think I would have to double my blood pressure medication to trade Nasdaq. So you'll see. I don't know. It's just I'm too old, right? Nasdaq's just like, you know what? I'll make a market in Nasdaq, but to trade it retail, no, man, it's just too thin. But it's not as thin as the silver market, which we should go look at if we get bored. So there's a fail to look below. Here's a look below and fail where that candle, if you'd waited, right, you'd have to pay much more, right? So that situation is completely different than this situation. You see? Right? The candles that follow it, the business is slower here. The business here is faster, right? So now how do you know that in real time? At first you can't. At first it's impossible to know it in real time off of like a flow chart, but you just have to and this is where, and I, I can't say this enough. Chart replay is, I don't know if you guys remember Mike Singletary from the Chicago Bears, 1985. That guy would know where the running back was before the running back got there because he watched so much game film, right? And who's the other guy? Some quarterback. I can't remember. But the guys who do their homework, right? If you replay the charts, speed them up, slow them down, speed them up, you'll start to build like this database in your head of different types of price action. And different types of price action mean different types of business, right? It's, it's like if we were sitting in Walmart, the customers coming in at like maybe 11 o'clock in the morning or 1 o'clock or, on a Saturday are different than the customers coming in at Sunday night at 3 a.m., right? You guys remember? Um, does that make sense? You know, so sometimes these Globex sessions are really slow. It's like you're working in 7-Eleven and you got that one old hot dog going around and around and around, right? What's my take on order flow stuff? Well, order flow, Mike Marshall, is a marketing term, right? It's a marketing term. So stacked imbalances, unfinished auctions, deltas, that is all a waste of time. It's that is marketing, and most of the people who talk about that stuff have never actually traded, like size. So order flow just means the flow of customers coming in to the market. So this will tell you more about order flow than all of that stuff. An unfinished auction makes no sense to me. You know why? Let me talk about unfinished auctions. Because it doesn't take into account order flow. So if I have a 5,000 contract sell order and that takes the market lower, when my sell order is completed, that business is done and the market will rotate higher. Do you understand what I'm saying? Imbalances, I don't even know what an imbalance is. That means maybe you should go see a psychiatrist. I don't know, right? This imbalance thing I don't get, right? And delta just means bid-ask volume difference, right? So if delta is going higher, it means they're taking the offer. If delta is going lower, it means they're hitting the bid. Sometimes price will go up while delta is going down. That means inventory is being absorbed on the bid by size traders. So unless you've actually traded, like most of these people who talk about order flow, that's a marketing term, right? I laugh at it. It's like in the 80s, turbo was the marketing term, right? Turbocharged cars came out, so they had turbo cologne, turbo sunglasses, turbo toilet paper. Everything was turbo, turbo, turbo. Now it's all order flow. You got to understand, most of these people want to sell you things, right? So there's order flow software. right? All of that stuff, right? It's just, you know, it's just, it's not necessary, right? So the thing is, Marshall, how much information can you hold in your head and execute? So if you're thinking about stacked imbalances, unfinished auctions, delta, and you don't see the offer moving higher, and you're shorting into a higher moving offer, which is that red line that's moving up, none of that stuff's going to do you any good. It's just like thinking like if you're in a street fight and you start thinking about Euclidean geometry, you're going to get your ass kicked, right? What do you need to execute? Keep it simple because trading is simple. The more you overcomplicate this stuff, especially with marketing terms, right? When you use all these marketing terms that people use to sell software and courses, you got to remember most of these people who talk about this stuff have never traded a million share order in a day, right? They've never distributed 300 million shares of stock over a 2-year period. So they've never traded size. So when they talk about size, right, that's why people who use Bookmap and Bookworm and all that crap, right, they get it wrong all the time because they don't understand how size business operates. Does that make sense? Right? And you guys, you don't have to fall for all that stuff, right? There's, I can tell, there's so much information, right? How do you trade higher time frames? You, yeah, great question. You go, say I wanted to trade, let me find a nice look below and fail here, right? So say I was doing a look below and fail of 68.64, right? So when the market comes up over 68.64, you ever used a microscope? So this is your sort of larger view. What you do is you go and watch 68.64 on a 1-minute candle chart, and you watch the order come in around that level, right? And you zoom in, and that will help you with your execution. I have videos on that. You should check them out. They're in our room. Make sense, right? So you look at the higher time frame, you've got your level. Then you zoom in on that time frame and you watch the offer as it relates to that level that you were watching on a 1-minute chart. Simple. Yeah, there are people who are going to try and take your money all the time, right? They want to sell you software, they want to sell you um, and it's thousands of dollars. I've seen some of these guys. They charge, it's like $1,500 a month and all this stuff, and it's so much easier just to watch a candle chart because all of this stuff, right? All of this stuff, stacked imbalances, unfinished business, which means that you probably need some prune juice, um, all that stuff, delta, that didn't exist until they started making all this software, right? So they came up with, oh, let's do this, they'll buy this, they'll buy that, right? Because I've worked with software companies who wanted me to sell their software, but their software didn't make any sense, and the guys who built the software had never traded volume in their life, so they had no clue, right? They're talking about unfinished business, and I'm like, unfinished business? I mean, man, I think you need to go to the bathroom, go have some prune juice. That's what unfinished business means in the brokerage industry, you know, little metamucil, right? So that's become very popular. Computerized trading has changed the world in good ways and in bad ways because they try and sell you a bunch of useless crap that you don't need, right? And I'm not beating up on these people. If you got a hustle going, make your paper. That's fine. But for my people, my friends, I like to save my friends money, right? And time and a lot of mental stress. Before 1995, right, when Windows 95 came out, software started changing, right? Before Windows 95, uh, basically you had a chart or a level, and before charts, people would just watch a level and then watch the offer at that level. So how did people trade? If I told you, Marshall, and all you other guys, if I said, look, I take away all your charts and I give you a ticker, a real-time ticker, can you trade? Can you get rid of all of that crap and just trade this, right? Can you trade just off of that? Because that's how we did it before all of this stuff. When I started on the trade desk in 95, our level 2, which cost $1,500 a month, didn't even automatically update. You had to keep hitting enter to refresh the level 2, right? So how did we trade? How did we make markets? How did we do all of those things? So you just watch a level, and when the offer starts moving over that level and cannot come back down to that level, then you know that the sell orders are complete. Then you go long and you put your stop under that level. Does that make sense? Simple, right? None of this stuff existed 20 years ago, 30 years ago. Trading's been around for hundreds of years. How did people trade in 1873? How did Commodore Vanderbilt take Harlem Railroad to $1,000 a share? Using little slips of paper out of an old cigar box, right? Writing down trades, right? How did what's his name? The old man Kennedy, how did he manipulate stocks? They didn't have computers, right? So none of that stuff matters. None of it matters. And it's just going to mess up your head and it's going to screw up your execution. Hey, Dave, how you doing? If you can pay attention to a 1-minute candle chart, you'll find that it will change your life. You can see how, look at that. You see that? That's that little position we went up to sell. And when we came down, we came right back into that position. They stopped selling. They meaning the wholesale long stop selling, short start to cover, market rotates back up. Simple. If it's choppy, wait. So for you, Harris, you're probably got a little bit of a ouzo hangover, right? Just chill out today and watch, right? It's the last trading day of the year, right? Just relax, watch, have a great New Year's Eve, you know? Just take it easy. I mean, yesterday I did sessions with you guys, and as soon as I was done, I ran outside, right? I think I did one trade with 3 micros, right? That was just to keep you guys company, right? And then, you know, then I bolted. Because it hasn't rained up here in northern England for, I don't know, almost a week. It's been great in the beautiful city of Liverpool. Hey, Raj, how you doing, brother? Right, in England's greatest city, Liverpool. Let's see if Raj is awake. So yeah, it's probably going to be pretty choppy today, right? And if we, what I'm really interested in is that stop here at 24, and then that one here, just under 19, 18 and a half. And can we get down to the gap? I don't know. There's the gap fill. It would be nice to fill the gap, right? It would just, the markup, everything's been marked to market as of yesterday. So nice and calm. It's been a very calm month end, eh? It's very this year end has been a compliance officer, CFO's dream because nobody's doing anything crazy. Everyone's just kind of on side. It's nice and calm. That's the beauty of this year end. There's no drama. Now that's boring for us as retail traders when there's no drama, but it's nice to have a couple of days off. When I go in with one green candle, like say this one here, where was the good one? So as you know, Harris, when I go into the look below and fail, right? I'll go and I'll put my buy order in, I'll put in my stop, and as soon as I get long, I put sell orders in. This is how we used to trade in the old days, right? If the market takes out that order, great. See if it takes out that one, right? So here let's break it down step by step, right? Look below and fail, long, stop. As soon as you're long, say you buy 3 contracts here, you know that there's going to be a seller here. So you're going to put at least 1 or 2 orders on the way up, and your third order will be up here. Now, if that order gets executed, great. If that one gets executed, great. If you see that there's a seller right where you expected one, then you'll take this order and you'll kick out of it there. You use your sell orders to confirm if your trade is working. If you're long and your sell orders are not getting executed, it means you must lower price because somebody is competing. If you are short and your buy orders do not get executed, then you know there's no supply at that level and you're going to move your buy orders up, right? Okay, let's go look at silver before we let you go for the day. Yeah, I'm just looking like silver is a look above and fail of 79.83. And right now we're underneath 72.25, right? And we can go dig in on that, right? And you can use the 1 minute chart with some levels. So you can see that there were sellers here. We looked above that, came back in, right? Exactly. So those 3 contracts, offload one with 1 point, one for 2 points, and one, let's say, for 3. But use the levels. You got to use the chart, Harris, right? Because this chart is like it's like an ECG, right? You're looking for where that resistance is. So if you were long silver, say at 73, and you know that there's a seller up here at 75, you got to get up there and compete with that seller, right? See, they sold here too, right? There was a seller there, and then before they got there, so as a retail trader, you'd love to hold for this. And don't worry, later on in life you will hold for longer, right? But for right now, take the money. The reason is we want you to get used to being paid. Once you get used to being paid as a retail trader, you will not do anything to screw it up. Even if you're making $50 a day, and at the end of the week you've made 250 bucks, you're not going to do anything to lose that money. The problem with retail traders is that they are conditioned and used to losing money. So they don't think about capital preservation. They don't think about profit, right? All they think about is home runs, which is a great way for institutions to take all your money, right? So get used to, as soon as you're long, you're a seller and you're looking for competition, right? From other sellers, right? As soon as you're short, you're a buyer and you're looking for competition from other buyers, right? Get that into your head. Bake that into your head. Once you do, your trading life will change. I promise you. It's the way you look at these things. Hey, Tim, Happy New Year. But again, if it's choppy to reach 1 point higher, how do you manage to hold it or exit? Well, you got to train yourself, right? So, Harris, you're a neurosurgeon. You should understand. Now, if I'd taken you when you just completed your bachelor's degree and stuck you in an operating theater, right? Would you have been able to perform neurosurgery? So, like I said, if you were joining us late, you have to replay the charts just like you studied in medical school, right? You go into the lab and you do dissections and you study and you study and you study. You're like, I don't know if you guys watch surgery over and over again, right? But you have to build that sensibility. And the situations are always going to be different. The choppier, remember what I said, right? You got to write this down. When the candles are small, that means business is slow and it's choppy, right? At first, when you start trading, you should be looking to take profits as soon as possible to get used to it. Do you understand what I'm saying? In the DOM, if I want to move my last one down, if it's a slow market, Joe, I'll move it down. If it's a fast market, hit flat. In a faster market, use the flatten button. I know it's a market order, but in a fast market, just get out. Okay? Especially in this market when it's thin. When that order book is thin, right? Then the market can move very quickly, right? It can move large moves in a very quick amount of time because there's no shock absorbers, right? It's like driving an old Ford F-150 with no shocks, or the shocks are all blown out. It's going to be bumpy, right? So RTH, you get more participants, you get more orders, so you get a little bit more cushion. But as soon as any kind of volatility comes in, that cushion just evaporates instantly, right? Because of electronic trading, you want to condition your reflexes. So, if you were in my mentoring course, you and I would go over step by step on how to do this, right? So I take the trader and I go, okay, we're going to do this, we're going to do this, we're going to do this. And then we like run drills, like, hitting the sled in football, right? Or, doing skill drills. And you do it over and over and over again on the sim so you understand how the software works, you understand where the buttons are, so you don't hesitate, right? And you just keep doing that over and over again. Then you watch chart replay and you got to put it all together, right? But it works. It's just repetition. Hey, Black Hawk, Happy New Year. Yeah, I'm curious to see what's going to happen in this silver market. I'm sure the Hunt brothers they're up there laughing. Yeah. So if you guys are interested, I'll do one quick plug for the room, right? This is the tradingsyndicate.org, and what we want to do, my goal is to get you guys profitable, right? Even if it's $100 a day, right? It's $100 more than most retail traders are making, right? So we got a holiday special, right? And you get free access to our AI, right? Which has been trained by traders, not some guy who used to work the fry station at McDonald's and is now teaching trading, right? Can't beat the price. It's $20, right? And there's no obligation. So if you come into the room and you don't like it, but here's the thing, if you come into the room and you don't like it, or if you don't understand what's going on, reach out to me. I'm available for help, right? We're there to help you. Oh, what else? What else should we talk about? Yeah, so it's just training, Joe. It's training and training and training. See, that's why we do the same thing every day. So when you use your DOM to put in orders, you put in your buy and you put in your stop right away. And you should be doing that. If I told you right now, 69.27 bid, 26 stop, the order should be in before I finish my sentence. Right? If I said 32 offer, 33 stop, those orders should be in before I even finish talking. That's how quick. We are. Yes, we are underneath the skyhook, Raj. I think it's just going to be a nice slow liquidation. And we're going to try and let these shorts cover with some dignity before the last trading day is over. Nice and slow. See, look at these candles. So Harris, you were asking about candles, right? Look at these. Like this is obvious. Don't trade, right? It's obvious to not trade that, right? So if you see that happening on a look below and fail, you know that you're going to either have to sit in that trade for a while or not take it, right? And that's what we do in the coaching, in the one-on-one. We we train you to react. And it's not just so you can trade faster. That's not it's not about that. What it's about is training you to get out of bad situations quickly. Take your bread from the baker even if you ate part of it. Yeah, that's a good one. Yeah, no drama hopefully, Raj. Let's just coast into the new year, you know? I'm Canadian, so I'll use the curling reference. You know when the curler lets go of the curling rock and it just slides without any drama down the ice? We just want to slide into the new year, right? You know, the curling rock's not bouncing around, it's not hitting people, knocking people over, it's just gently sliding into the new year, which is what every compliance officer, every CFO, every accountant wants, right? I think the accounting departments are going to get their wish this Christmas because it's a nice, uncomplicated year end. I had a buddy of mine. He's a really smart dude. He's an accountant, and he used to work for Cargill, which is like the world's largest private company. And they sent him to Vancouver to police this rogue trader that they had in their office. And this guy was sharp, man. This guy could trade circles around people. He knew the business, he knew the systems, he knew everything, and he'd hide stuff and do stuff. And their year end, oh my God, my buddy would be in the office for 36 hours, breaking out in hives trying to figure out where this guy stuffed things. How much do I use value area low and high? Not much at all. It used to be really, really important. 2016, 2017, Joe, the market started changing. Before 2017 and the algos, there was a really nice trade. The market would go from value area high to value area low, value area low to value area high. The ranges were smaller, so we could buy value area low and it would like drift up to value area high and we could sell it. That was a beautiful trade. That doesn't really happen so much anymore, right? And because when the ranges get big, the value areas or where the cost basis is, like if you're trying to trade value area low to high here, right? That's a huge range. Where do you put your stop? How does the execution go back to the 1 minute chart? What we use this value area business for, right? And and I don't mean to be disrespectful, but value area is more of a statistics term, and it really doesn't help you in the real world. In the real world, I like to use the term cost basis because you can see there's a cost basis here, sold here, sold here, sold here, right? And then back down, right? That initial balance stuff, I don't pay any attention to it. There's a lot of these market profile things because you guys got to remember that market profile was invented in the 80s, right? Now in the 80s, they had what, Windows 3.1, right? And they didn't have any algos, right? They just started working with electronic trading. They used to call it program trading, right? So in the 80s, when human beings did the execution, a lot of this market profile stuff was very, very much more useful, right? That's why I teach practical market profile. So what I care about is where the cost basis is. So here, let me just, you can clearly see there's where the position was, there's the sell-off, and that position was here, taken and sold up here. So if we get any major selling, we're going to come back down to where the position is, right? So this is where the inventory cost basis is. That's why I don't use the term value, because value is it doesn't tell you anything. It just tells you where 70% of the trades occurred. Great, now how do I use that? Right? So if you know that your inventory is priced here, they're going to go take it and sell it here because that's the goal of the market, right? Is to take cheap inventory, sell it for a profit, and when nobody wants to buy it anymore, they mark it down back here, right? Just like Walmart. So if you think of this as a sales chart of apples or oranges or anything, sales were going well, put it on sale, went down here for a couple of days, right? We absorbed this inventory down here, right? The shorts came in and covered. The longs built a position. And then once you establish price stability, that brings in buyers. Does that make sense? That's how you should look at market profile. So what are the main takeaways from market profile? One is cost basis, right? Where are your goods priced? Number two, poor low, poor high. Poor low is competitive buying. Poor high is competitive selling, right? Number three, single prints. Single prints on the way up are a short position. Single prints down are trapped longs. That's all you need for market profile. You can take the rest and throw it away because you're just going to waste time. I love market profile. I love what it's taught us, but it has been dramatically overcomplicated and unpractical. And it is completely impossible to trade pure market profile without a candle chart. That's why when I first started trading in 2012 on the retail side and I found market profile, I thought this is great. But back then, if we had a 30, 40 point range, if it broke 40 points, that was a big day. Very different now. Now we have 100-point ranges like it's no big deal. Remember, we had a 500-point range this year in the ES, right? Impossible to trade market profile, right? So as much as I love market profile, there are only about three things. Oh yeah, and the stops. Thanks, broken candles, right? And then when you zoom in, right? But the stops you can use on a half-hour candle chart too, right? But these are the big market profile specific things. And then the stops, the stops are just going to be where the responsive buying is, right? Because if you know that there's a stop here, anyone who's long above that stop, if you break that stop, they'll start tumbling out. It's like a piñata, right? And the shorts will be all sitting there like hungry dogs waiting to cover. That's why you get responsive buying before a stop. But you can see that on a half-hour candle chart, right? So profile is a great thing, but you shouldn't trade from market profile. And don't go down the market profile rabbit hole because you will waste years. Literally, you can waste, some people look at, oh, that's a shelf and this is unfinished business. And, this is a mango smoothie and this is, they come up with all of these terms, but none of them make any money. So what I want to do is I want to simplify trading so you guys can focus on execution. Because execution is a lifelong process, right? Execution, it changes all the time. The market conditions change, right? So you want to condition yourself and train yourself to execute under different market conditions. And you should be able to understand when to trade and when not to trade. And there is no better indicator of when to trade and when not to trade than a simple 1-minute candle chart. You just got to know what to look for and train yourself over and over again. At first you start seeing it, and then you try to execute on it, right? Once you see it, you're going to try and execute on it. When you start executing on it, you're going to screw it up. Everybody does. Be cool with that, right? Then slowly, just like learning how to play, like if I gave you a violin, Joe and Harris, right, and I asked you to play the Sibelius Violin Concerto, it would sound like you're strangling a cat, right? You're not going to sound like Yasha Heifetz. You're not going to be like a virtuoso, right? The same thing with trading. It's practice. Practice, 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 practice. And if you have the same setup and the same thing you do every day, I know it works, right? We have people making 10 grand a day in our room, so I know it works. I make money, right? We know it works, right? You just have to exercise the same thing every day and stay focused. Don't go off into the weeds with all these little things like delta, blah, 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 right? Oh, did you practice, Harris? Right? Maybe you were never good because you didn't practice, right? Poor choice of example. Yeah, Malacca, you didn't practice, man. You got to practice. Okay? Yeah, there are different cost bases at different time frames, for sure. Okay? All right, folks. Have a happy new year. We will see you on Friday. Don't drink and drive, right? Have a wonderful day, and we'll see you at 9 for the next session. Thanks, everyone. Bye for now.